Good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is August the 5th, 2027. And let's take a look at the Kansas City wheat futures. So this is the monthly chart. It's a continuous chart. Let's get rid of these things. Why are they on there? And yeah, you can see this chart's in a downtrend. So I do hear a lot of people say the technical analysis does not work. Yada, 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 blah, blah, blah. But take a look at this purple line here. This is the 200-month moving average. And I don't know. Hey, look at that. I would say it acted as resistance, acted as support. Some sort of support resistance thing going on here. Got tested again, got rejected. So enough people are looking at it to make it, I would say, self-fulfilling. Now, all these indicators should be used with other indicators to strengthen the conviction of the idea, and that's just a really low-level fundamentally bare bones, example I'm giving you here of technical analysis, but it does work, right? So I have a series of lines here that I have drawn in dashed lines, and I didn't annotate them. I wish I would have. They've been on there for quite some time, but they're obviously levels of interest I had published before in the charts, and you can see we're testing that now here, and this is the monthly chart. We're making new monthly lows. The lowest, haven't had monthly lows this low since back in August of 2020, and that's when I actually published in my first newsletter that the dawn of the golden age of agriculture, just based on the chart pattern. So I'm going to check that out in the Klarenbach report. You can, but or you can just trust me on that one. But yeah, so anyways, what's the price today? It's at 505, at $5 magical round number. You can see it's acted as resistance in the past, some sort of, maybe not support, but it's a round number. It's significant, right? Let's look at the weekly chart. And I drew these trend lines on the weekly chart, and you can see trend lines, again, should be drawn with a crayon. I'm sure there's different ways to draw trend lines, different widths, different connectors. You want to connect with the candle wicks or the candle bodies. I prefer the candle bodies, and I use the best fit approach. So right now, this trend line, it's following this trend line as I have drawn it down here. Now you can draw it up here if you want, whatever floats your boat. I don't think it really matters at this stage. But yeah, I'm going to draw mine like this today. And yeah, below here, I have another level of interest at 476, it looks like, and again at 440. So, I mean, you want to be aware of those levels of, those levels have been significant in the past. They've acted as some sort of support, and perhaps they will do so again. There's a fair bit of resistance back here. I'd say I call it interest around this $5 level, and I would say it acted as resistance, quite often, until it broke above in the fall of 2020. Now we're back down there testing it for the second time on this weekly chart. And again, the more times the level gets tested, the more the sellers become exhausted. Or sorry, in this case, the buyers become exhausted. So they bought it up at $5 back here in May. We're testing their resolve here this month as well, as we're trading at 505. So we'll see if the buyers can support this price, but the more times that level gets tested, the less buyers there will be. So you want to be aware of that. Now I'm going to go back to this, actually let's see if in the weekly chart, I'm going to flip over to the arithmetic chart. So what I did back in the day, I draw in some head and shoulders pattern up here. Maybe it's best shown on the daily chart. It is. And I did a measured move from this head and shoulders pattern here, and I came down with a value of 250. So that's half the price we are at today. It's hard to imagine the price going from $5 to 250, but I mean, you never say never in this world. The last time it was at that level was down in 1990, right? 34 years ago. So that old thing, can it get back down to the previous lows? I don't know. I'm not making a timeline on it or a bet on it, but as technicians, we try to get indication where the price can go to. I drew this back in August of 2024. Now there's also the argument that the old highs are the new lows. Well, we're going to test that theory out here. Well, we're testing it out right now at that $5 level, right? You can see this monthly chart. It's been significant in the past. Let's clean this up a little bit. You can see, yeah, $5 has been an area of resistance, I would argue, for quite some time, and then it's been acting as support. So we'll see if that continues. But be aware where the price can go. you know, we break below that $5 level, I think we really need to start making attempts to make up ground on the downside. Now, maybe that's probably through the futures market or making cash sales. But I think once we break below that $5 level, then I think the sentiment it's already bearish. It's just going to become more bearisher, right? So you want to be aware of that. I have a trend line drawn here on this weekly chart. Actually, it's on the monthly chart. And let's go back to the log chart. So maybe this trend line, but that trend line really, you know, it's October 2025. It's, you know, down here at that 440 level. I mean, hard to imagine, but you know, it got down there 5 years ago, right? My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.